All right, let's get into it. We are going to break down one of the most incredible investment plays of the last decade. I'm talking about Warren Buffett's legendary shopping spree in Japan, a move that absolutely floored the entire financial world.
So, here's the central question, right? In the middle of 2020, when the world was in a full-blown panic, why on earth did one of the greatest investors of all time decide to pour billions of dollars into a market that most people hadn't thought about for 30 years? That is the mystery we're going to solve today.
So let's just paint the picture for a second. It's early 2020. The pandemic is taking over everything. By the summer, global markets are in an absolute nosedive. Fear is the only thing on the menu. And it's right then, in August of 2020, that a 90-year-old Warren Buffett decides it's time to buy. And where he went shopping was the last place anyone would have guessed. Not some hot tech sector, not an emerging market, but Japan, a market famous for its lost decades of economic stagnation. While literally everyone else was hitting the sell button, Buffett was buying, and people were just baffled.
So, what exactly was on his list? Well, he bought a 5% stake in each of Japan's 5 biggest trading houses. They're called Sogo Shosha. Now, these aren't flashy startups. Think of them as the old-school industrial heart of the Japanese economy, dealing in real, tangible stuff like energy, metals, and food.
So why these companies? This is where we start to peel back the first layer of Buffett's genius. He saw what nobody else did, a forgotten treasure trove of value, just sitting there in plain sight. And to understand this, you got to know about one key number, the price-to-book ratio, or PBR. All it does is compare the company's stock price to what its assets are actually worth on paper. For a value guy like Buffett, seeing a PBR below 1 is like a giant neon sign flashing on sale. Let me put it this way. A lot of these Japanese companies had a PBR way below 1. That meant Buffett was effectively buying $10 worth of real stuff, buildings, ships, commodities, for maybe $5. I mean, it was an insane discount. But wait, it gets even smarter. See, Buffett saw that inflation was probably coming. And what do these companies own? They own real-world assets. Energy, raw materials, food, all the stuff that actually gets more valuable when the value of money goes down. They were the perfect hedge against inflation. Okay, but this is where the story goes from just a great investment to an absolutely legendary one. The real magic trick wasn't just what he bought, it was how he paid for the whole thing. This part is pure, unfiltered genius. Check out how this machine worked. Buffett didn't use a single US dollar. Nope, he borrowed Japanese yen in Japan, where interest rates were basically zero. Then, he took that almost free money and bought stocks that were paying out a nice 4 to 5% dividend. He was making money from day one, just on the gap between the two. This shows you the engine perfectly. On one side, your cost of money is next to nothing. On the other, you've got this steady stream of cash coming in from dividends. That difference in the middle, that's a guaranteed profit. It's a classic arbitrage play, and it was nearly a perfect low-risk trade. And here it is, the final masterstroke. Because he borrowed yen to buy assets that were priced in yen, he completely took currency risk off the table. Think about it. If the yen got weaker, yeah, the value of his stocks might go down, but so would the value of the debt he had to pay back. The two sides of the coin just canceled each other out. The risk? Pretty much zero. So what happened when he put this perfect trade into motion? Well, it wasn't just a win for his company. It created what you could call a Buffett tsunami, a wave of money that ended up lifting the entire Japanese stock market. The effect was just, wow. It was immediate. The second the world found out that the Oracle of Omaha was betting on Japan, everybody else wanted in. Money poured in from all over the globe, and the stocks of these 5 companies just exploded. Some of them doubled, even tripled in value. And the scale of this win is just staggering. He's since increased his stakes, and the paper profits are now well over $8 billion. And that's not even counting the millions and millions he's been collecting in cold, hard cash from dividends every single year. But the Buffett effect, as people call it, didn't stop there. His massive vote of confidence was like a green light for the rest of the world. It triggered a huge wave of investment into the whole Japanese market, pushing their main index, the Nikkei, past a record high that had stood for 34 years. He basically helped put Japan back on the map. So what's the big lesson in all this? I mean, beyond the mind-boggling profits,
There's a powerful takeaway here about how a true master sees the world completely differently than the rest of us. You can really boil it all down to a simple 3-part formula. First, find something that's just plain cheap. Second, make sure it pays you to own it with steady cash flow. And third, this is the secret sauce, you structure the deal with such a smart financing strategy that you basically eliminate all the major risks.
At the end of the day, this whole trade just proves a timeless truth about investing. While most of us are distracted by the noise, the scary headlines, the daily panic, the true masters are watching something else. They see the underlying currents, the actual flow of money. And that kind of leaves us with one final thought, doesn't it? Buffett found his opportunity of a lifetime in a market that everyone else had given up on. So it makes you wonder, in a world obsessed with whatever's new and hot, where is today's forgotten treasure, just waiting to be found?